So I have a year-to-date chart here for the S&P 500 index, and it's up over 15% year-to-date in 2025, which is a pretty good year if it finishes the year up over 15%. But we still have a couple of months to go, and the stock market can go either way. It can go higher from this point, or it could fall further from this point. Now you can see the big sell-off happened around April, and it started selling off around March because we started to get details that President Donald Trump wanted to announce tariffs and increase trade barriers against all of the United States trading partners. And of course, that's bad news for stocks because that means that U.S. businesses that are importing things from outside the United States will have to pay higher prices on those imports. And so that will either hurt their profit margins, or if they choose to raise prices, it will hurt their sales. The end consumers in the United States will face double negatives. In one, they will see higher prices when they go to spend money on the things they're used to buying. And then on top of that, the decreasing economic activity will lead to fewer jobs available for U.S. consumers. As you can imagine, if Walmart is selling 25% fewer units, they need less people, they need less cashiers, they need less people at the warehouses, they need less drivers for deliveries, etc., etc. So all that trickle-down effect will hurt and has hurt the U.S. economy, and investors are now beginning to price in those negative impacts. The positives were that the central bank in the United States was cutting interest rates to offset that decline in economic activity. Remember, when the central bank lowers interest rates, it increases economic activity. The mechanisms for that is lower interest rates make buying things that need financing cheaper. So your monthly payment for buying a car would be lower if the interest rate is lower. And so it encourages more folks to buy a car. And if you buy a car, the salesman makes money, the dealership makes money. You maybe go and buy some things for your car. Maybe you buy some seat covers. Maybe you buy some insurance, more so than you already had with your older car. And that creates an increase in economic activity. Also, if you buy a home, similar impacts, but even larger if you buy a home versus if you buy a car. So investors were confident that if the economy slows down, the central bank will cut interest rates and there will be that offsetting impact. So that's where I would be careful, and I would be focusing my attention on these undervalued stocks that have good prospects.
Click the link below to watch the full video.